Okay, Nicholas, great. Well, it's good. Finally, our schedules have lined up. You and I are not the easiest people to schedule, are we? Because always running around everywhere. But we finally got together to do this quick introduction video, sort of announcing a series of videos that we're going to do together on key crypto topics that relate to trusts, and also with some very specific jurisdictional experts. That's all to do with the book that we wrote. So, as a lot of audience know, have you got your book there? I have my book here.
Yes, it is.
Blurred out. So we have wrote the definitive book on how to hold crypto assets on trusts and foundations, and we're going to do a series of videos to really flesh that out. So yeah, anything you want to add to that introduction, Nicholas?
Yeah, well, first of all, Ross, I would like to thank you for the excellent cooperation in this project. So you're the right person with whom I teamed up, and it was actually something really missing, yeah, and there was nothing on the market interesting, yeah, nothing about holding crypto in wealth management structures, and so this is really a groundbreaking book. I think the publishing house will also be happy regarding the sales numbers, hopefully. Yeah. And it was also, I think, for yourself and myself, an interesting learning experience reading about all these countries and how they have adapted their laws or not adapted and how they're struggling to understand crypto. So a super project and as I said, a great cooperation. I'm very thankful for your help with that. It was we put in a lot of work, so a lot of sweat, a lot of time, but finally it's out, and I think we have really served the crypto community by sort of getting people to think about it, to put their thoughts into writing, and I think that will definitely also help lawyers and legislators see what's going on in other countries and what should they be doing, what are the standards that they should be following?
Yeah. Yeah, no, well, thank you for inviting me to co-author it with you. And it was my first time doing a book, so I really appreciated all your the invitation would be all your guidance on and seeing the process of writing a book. And yeah, it was a real grind at times, wasn't it? But that's the whole point, isn't it? It's in that grind that you force all these ideas out of your head into
Mm.
something concrete, right? And I think that was actually what was missing from the market was there's lots of ideas and people's opinions and all that, but I think we did for the first time bring that all together into a sort of concise look. This is kind of best practice in stone at this point in time. And I was really pleased to leverage all your experience. Of course, you've been in crypto for a long time, but everything that you've done with your
As have you, as have you.
yeah, I think you were a bit. I think you were a bit before me. You were maybe a couple of cycles before me, weren't you? But obviously you have your academy, don't you? Which you've been actually training lawyers. You've got a course that you run, which people should definitely have a look at on AI now as well. I think you do, don't you? So it
Yeah,
was a
yeah, AI
learning
is the next
experience for me.
big. Yeah, I mean it's so Ross, you have seen it as I've seen it how crypto has really developed. And a few years ago, before 2017, hardly anybody knew about crypto. And then in 2017, it became a topic of the mainstream. You had all these headlines and stories about the Bitcoin price going up and Ether and so on. And still, I mean, it was a fringe topic, topic for nerds, for very techie people. But over time, lots of interesting stuff has happened. I mean, you had these Bitcoin ETFs, you had these companies like Tesla and MicroStrategy, listed companies buying Bitcoin. You had lots and lots of serious people looking into this topic and researching it. So the space has really moved, and nevertheless, it's still not yet a topic. And it's not the case that everybody here in the floor of the office owns Bitcoin. But things are getting more and more interesting. So there's definitely demand for legal advice and to know how the frameworks and rules apply to this asset class.
Yeah. So perhaps what we could talk about just to keep this video short and relevant, and then in future videos we're going to go deep dive on the topics. But maybe it might be useful if you can say a few words about what you're seeing is happening now with clients that you're advising? I know you advise advisors that are advising clients, but also clients. And then I can maybe say a few words also on what I'm seeing, because it's a bit of a different bull market this time, isn't it?
Yeah, I mean crypto touches many areas of advice, and so I'm a partner in a very large law firm, and we cover the whole spectrum. Not every area is equally impacted by crypto, but you can have crypto questions in very obscure areas as well. Yeah? So I think the main areas of advice are definitely regulatory law and tax law. Then you can have crypto questions in litigation. So there are tons of asset tracing cases where people may have some issues with scams or with hacks, and are trying to reclaim the crypto assets. The IP area was of course very relevant when we had this NFT boom. There might be cases of employment law if employees are paid in crypto, and so it can be relevant for many legal areas. But by far the most important is definitely regulatory law. So
Mm.
can you offer this type of service, or can you what are the conditions under which you can carry out certain activities? And in the EU, in the EU, we have now MiCA, the Markets in Crypto Assets Regulation, which is partially in force already, and which contains a whole list of rules on certain topics. Some of which make a lot of sense. They are copied from the traditional world of finance. So whenever somebody else holds your assets, there's a need to protect the depositor, and to have supervision, and to have certain organizational safeguards. So I totally support that. There are some rules which are a bit maybe too burdensome, and there are also some rules which make absolutely no sense. But this is, I would say, the first attempt by the EU legislator, and possibly there will be sort of further developments and improvements. And but this has created a whole new legal area where lawyers can advise, and definitely will also create a sort of more clear playing field for entrepreneurs offering crypto services.
Okay, interesting. Yeah, I agree on the regulation point. I think it's only Panama now is the only jurisdiction that's truly unregulated, I think, because even the Seychelles now are bought in a VASP law.
Yeah, sure. There are few holdouts, but there always have been holdouts. You always had, I don't know, for example, when the Common Reporting Standard was introduced, and there was this international exchange of information on bank accounts. It took a few years until everybody was on board.
Mm.
Okay, today maybe there are like 3 islands that are not there yet, but basically all, I don't know, 200 countries of this world, except for the US, have joined CIS. The US has a special situation with their FATCA regime, but the same is the case with money and with AML law and crypto. Most jurisdictions have jumped on board and are good citizens, but there are few holdouts who will just wait and wait until the pressure becomes unbearable, and then they will join this bandwagon. And in other areas, we'll see this as well. Yeah? So there will always be countries who are faster to comply, and countries that take a bit longer. But yeah, it's interesting to see how regulation has come into this space. The US will at some point also move forward, and we are currently in the midst of election time in the US, and both candidates have sort of moved a bit into crypto, and that might be a signal that there's an attitude change in the US regarding crypto regulation. Maybe Gary Gensler's days are counted. We'll see.
Well, Donald Trump was at the Bitcoin conference, wasn't he? Sort of saying, he said, "I'm going to fire Gary Gensler, the head of the SEC,"
Yeah,
and everybody went
yeah.
mad. And then he
I
said
was
again,
cheering.
"I'm going to fire Gensler." So, uh, and I think that the Bitcoin price pumped a little bit after that, didn't it? So,
Yeah.
I get, yeah, I think they obviously recognise it's quite a big demographic of people that they need to win votes from that are pro crypto, right? So, yeah, hopefully the worst is over in the US, and that'll loosen up. I think it's probably more now that the banks have caught up. The US banks have kind of caught up with crypto, and BlackRock and that have got their ETFs that they perhaps they feel they can dial back the pressure they were putting on the sort of crypto companies that were out in front.
Yeah, yeah. So do you think that there has been, in general, a better understanding of crypto by banks? So have banks become, on average, more interested in crypto business? Because in the past, the attitude of most banks was this is like contaminated and tainted, and we don't want to touch that. It's at the same level as drugs and whatever gambling, and we just don't want to have to do anything with crypto. It's just too much of a compliance topic. So, are you seeing slow changes in attitudes of banks in respect of crypto?
Yeah, the banks, it's a good topic actually, because I personally feel that's one reason why the Bitcoin price hasn't pumped up as much as people were expecting.
Mhm,
Because I think people are finding it hard to onboard into the crypto
mhm.
system. So in the past, we call it on and off ramping, don't we? Which is moving into
Yeah.
the crypto system from the normal system and back out again. Normally, getting out was very difficult. Banks didn't want to receive money coming from crypto companies, but getting in was very easy. Where
Mhm,
now that itself is very hard. A lot of banks seem to have blocked, you can't use your credit card anymore to upload money or wire money. I had myself, I had UBS block a transfer to just to a very well-known Swiss exchange. They
mhm,
blocked it and things like that. So no, I think they're worse. Actually, I mean, as you know, I run a private advisory boutique. We advise on international tax issues, cross-border issues, and structuring issues for ultra high net worths and their families. But we have a real a side niche in with crypto founders. Obviously, we're hoping they're going to be rich guys and ladies one day, and we
I
them
will.
further. That's the whole
Yeah.
point. But so we get involved, but cross-pollinating all that global
Mhm,
international structuring expertise, bringing it to these young crypto Web3 founders who've got no idea about
mhm,
this space. And yeah, part of that is when we're advising, almost we've got to start with, can we bank this? Because
mhm,
create the most complicated structure that works legally, but if you can't bank it anywhere, then it's a problem.
mhm,
And for a lot of these crypto ventures, they've got no chance of banking. So
mhm,
luckily, they do survive on paying everybody in stable coins. Most people
mhm,
are happy to receive stable coins. They can use it, and maybe they've personally got one way that they can move crypto from that to their personal bank account. But
mhm,
no, I would say it's worse actually. I'd say it's worse, and while the banks themselves maybe have got their operations and their own offerings, maybe more crypto, they're
mhm,
not really allowing the sort of broader retail public to engage in the system, and
mhm.
whether that's because of what happened with FTX
Mhm,
in 2022. I think that has done enormous damage because
mhm.
retail got burnt so badly in that and a few other things. But yeah, do you agree with that? What do you see?
Yeah, sure. FTX was quite an event, yeah. But as you know, Ross, it just proves our point, yeah, that decentralization is necessary. And FTX was not crypto, yeah. FTX was a centralized party that you entrusted your crypto assets to. There was this weird guy, Sam Bankman-Fried, and he basically embezzled. He basically used the money of the uh, of the crypto exchanges customers to go on some gambling with in his other business, Alameda Research, and buying high-priced condos for his parents and business associates. So it was just a case of normal fraud, and this is just a risk of centralized structures of entrusting your assets to somebody else. So the whole idea about crypto is decentralization. You don't give your assets to somebody else. You put it into a smart contract, for example, or hold them on your own address, and then you should be safe. Yeah. So definitely, if the assets on your address, you're safe. With the smart contracts, we've seen a few surprises. I still have burns and scars on my body from DeFi, but in principle, yeah, in principle, most people misunderstood what happened when FTX crashed and burned. They thought this is crypto, and crypto is always sort of dangerous. But the pure idea of crypto is embodied in decentralized exchanges and not in centralized exchanges where you trust somebody. So we don't want to trust. We don't want to have to trust anybody. And yeah, but FTX, this case really had a lot of well, first of all, the crypto market tanked, and it took really some time for the prices to recover. But many people's perception of crypto was also tainted by these events.
Yeah, exactly right. Although I find people have very short memories in general, especially people in crypto. So I expect everybody to come back, especially if the Bitcoin price really goes again, which I expect it will, up over 100,000. You might see people pull back in. But yeah, it's interesting what you said about decentralization, because that actually is the main thing I see with my clients is what they're creating these businesses, which generally are peer-to-peer decentralized networks. So they basically created a platform that people can interact with directly on. But then they want to sort of step back, and they want to do that for a number of reasons. A, it is with the sort of crypto philosophy, but B, it is sort of perceived that if you're fairly decentralized, that you're generally outside of a lot of the regulations. I know that hasn't come out in the wash yet, but that is kind of the perceived wisdom, right? And also because a lot of these founders are terrified of a regulation back or a hack, right? And so they're using people from our world, trustees, corporate service providers. They're engaging with this world for the first time in order to protect themselves, right? Because they have very, very strong business risks from this. So well, that's one thing I think a lot of people in our world will be seeing is people approaching them. Hey, look, can you help me set a trust up? Can you set a foundation up at companies? But what they really need is that aid to make sure that they are very decentralized, sort of outside of scope of regulations, that there's proper governance therefore in place, that is that governance that is justifying the opinion that they're not falling into one of the regulations. And also that they generally, they're not involved if the SEC come after it or there's a hack. It's not the founders that are getting the founders that are long gone that are getting attacked, right? And they're generally embracing that, right? They are stepping back from these projects and leaving it to a DAO to vote and run on these things, and actually handing over to professional offshore, traditional offshore administrators and trustees and directors to run these structures, actually, which is quite interesting.
Yeah, but if you think about it, I mean, okay, crypto has been, also Bitcoin has been existing over a decade now, a lot more than over a decade, and DeFi, so smart contracts is a bit younger. DeFi is even younger, but it takes a few years until these concepts really mature. And we have seen lots of Web3 projects which call themselves decentralized, but they're not there yet. Yeah, there's so many elements which are very centralized and which then leads a regulator to pinpoint responsibility and to attack founders, for example. And the points of centralization are often well, the front end. So you have a great smart contract or a series of smart contract, a whole bunch of smart contracts that run on a decentralized blockchain. Okay, that's super. It's unstoppable code. Nobody can change it. Okay, fantastic. But then you have a front end which somebody paid with his credit card, and basically if the bill is not paid, then the front end is down, and it would be very hard to access the smart contract directly if you're not very techy. Okay, so that person who is paying for the upkeep of the website and the domain name, for example, okay, that person must have some responsibility. Okay, then you have the DAO. Okay, that sounds great that you have a decentralized autonomous organization, but I mean, how decentralized is it? You might have a huge group, the founder and first DAO members. They have a very large percentage of the DAO tokens, and it's not yet there. It will take a few years until things get very spread out, and until before you get rid of all these whales that can really decide everything. Yeah, it's a bogus democracy. Yeah. Okay, and then you also have the smart contracts. Okay, they are immutable, and nobody can change them. Okay, but then you have so many cases of smart contracts with sort of emergency provisions. So if something bad happens, then 8 team members together have admin keys and can change things. Yeah. So okay, let's hope that these 8 guys don't collude and go rogue. Yeah. And that is again an entry point for a regulator. Okay, these people who have the admin keys, I mean, they are in charge. Yeah. Okay, then you have cases where you have a VC fund, basically who sort of purchase tokens and is a very large token holder. Okay, you have deep pockets. Excellent for a regulator. So there are many things that still have to be taken care of. Yeah. And another point is okay, you have a DAO, and it basically the question is posed. Yeah, so it's on snapshots.org or whatever it's called, and okay, there's a vote. Okay, 95% are in favor. Okay, fantastic. And then basically it's not like an automatism. So when the vote ends, this is automatically, the code is automatically changed, modified, and sort of things go on autopilot. But then somebody from the team has to basically manually update the smart contract. So this is also, I mean, it's also not decentralized. There's a central person.
And what I see with the structuring, because obviously that's like the sort of DAO software side, isn't it? But then you've got the structure, which could be like a Cayman Foundation or something. So the director or government's committee on that approve it, right? And quite often what they do now, they create these things called security councils, which sit in between the DAO vote and the entity implementing it. And that's basically a way of vetoing any. And they do need it, to be fair, because you're going to have like Twitter trolls and like the madness of the internet, right? So they feel they call it Security Council, which is to sort of filter out any mad proposals, right? So it's there to stop the stupidity of the internet. But as you say, that could be the trigger that sorry, that's regulated, right? You guys are in control. So it's very hard to balance the sort of risks. I mean, we call it progressive decentralization. It's a sort of word using now. It's not one thing you do from one day to the next. As you said, it's over time, right? Slowly. I guess there's probably a few projects out there that are fully decentralized that whatever the DAO votes, the contract updates automatically in that. But yeah, it's hard to balance those things.
Yeah, I mean, I think it's natural that these projects start centralized because you have these 3 guys that sort of come together and say, okay, let's write a smart contract and let's start this project. In the beginning, they pass all the decisions, and then of course they issue a governance token, and if you engage with this protocol, you will get these tokens, and then people become members of the DAO's parliament, so to say. and slowly things get decentralized. So it's a process. It takes time, and
It's a bit like the sort of royal families, isn't it? You know, how they transitioned over to parliaments. It's very
yeah,
analogous, isn't it? You know,
that's true. So
right?
that's a good
And then there's always
comparison.
that question: are they really running things in the background, even with the royals and that, isn't it? So it's quite a analogous because yeah, you see that with founders. Obviously, a lot of the VC money was raised because of them. They were the ones that are out promoting the project and publicity, and then they want to go, oh no, nothing to do with me.
Yeah, yeah, sure. But they're on the YouTube channel. The
Yeah.
YouTube channel contains that guy's name, and he says, "I'm speaking for Aave," for
Yeah,
example.
yeah. I've had it with clients, you know, we're trying to say, no, you know, you're just a project manager in a software company now, where before they were, you know, founder and CEO. And
Yeah, okay, now it's a bit more humble.
yeah, so yeah, I mean, I've been advising some clients from day one saying, look, you know, don't call yourself CEO, just don't put your name next to the name of the actual project. You know, you're just in the lab company that's facilitating
Mm,
some software, just call yourself a project manager. But then that's quite hard when you're trying to raise money and publicize the thing. So yeah, it's very very hard for founders. They're trying to do something very genuine most of the time, right? A cool
mm,
idea, and it's very hard to tiptoe through all of this. And it does seem the solution is to come and work with providers in our industry. The other thing I see is a lot of these young founders have never really ever touched the legal system before,
mhm.
got a lot of money, and I don't know if you would agree with this statement, Nicholas, but you never start litigation unless you really have to, right? Because
Mhm.
I mean, the lawyers in the litigation world go off to the races on their billing like
Yeah,
a private client. You might
very
think
much.
private client lawyers are bad. We wait till you see a litigation lawyer. And
Yeah.
once you've started litigation, very hard to stop it, right? It will take on a
Mm,
life of its own. And I see that a lot of this the crypto world is very litigious.
mm,
And they're putting the trigger on each other very quickly and easily. The lawyers are having a field day. So yeah, I mean that is another risk, right, for people getting involved in this. It's high profile, lots of money, people that are
mm.
just hiring lawyers left, right, center. So you've got to be prepared. You're probably going to get sued if you're dealing with a nascent project rather than maybe just an ultra high net worth guy who's got some Bitcoin that he wants to stick in his family trust. But if you're dealing with projects, prepare yourself for some litigation.
Yeah, I mean, crypto litigation is an interesting topic. I'm not a litigator, but if we sort of if we exclude from this discussion all the regulatory litigation cases, there have been a few super interesting cases. Of course, there were all these cases regarding Craig Wright and him being apparently him being, as he said, the creator of Bitcoin, but not according to what the verdict then finally concluded.
Mm.
So that was a super interesting case, very weird personality,
Mm.
and the
Because all he had to
second,
do, all he had to do was move $1, right? He could just prove
yeah, why did it not? Why did it not just
he was going, I'll
move?
move, give me the wallet and I'll move $1 there and
Yeah,
do it
I
live.
mean,
I'll do a
okay,
live stream. And that proves that, I'm
yeah.
Satoshi Nakamoto, but
So I mean, it was so easy, yeah. I mean, but okay, that was very bizarre,
mm,
and also a high-profile case, yeah,
mm,
because he had sued so many other people who had put the Bitcoin white paper on their website, for
mm,
example, or who said that he's fake Toshi and not
yeah.
Satoshi, and so on. So that was a whole bunch of interesting cases. Then there was this case, I think it was called Tulip, with these Bitcoin developers. Sort of, do they have a fiduciary duty? So it's a common law case. Do they have a fiduciary duty towards users of the system? And if somebody loses 200 Bitcoins, must they adapt the code to help that person retrieve the 200 lost Bitcoins? So do they have to sort of do everything in their power to help the poor people who misplaced their Bitcoin seed phrase, or their private key? So that was also that is also an interesting kind of case that and it's also a question of decentralization about
Mhm.
Bitcoin, which is the decentralized crypto asset. And but nevertheless, you have a few people who are tinkering with the code and who are proposing code changes. It's not an automatism, yeah. They can propose stupid things and nobody will accept them, but they have a certain level of influence and they're important. So yeah, uh, crypto legislation, crypto litigation. There's some cool cases that have been going on,
Yeah.
and you had all these cases about under common law, is it even property? Yeah, which for a civil law lawyer is a strange question. Why would it not be property? But
I think
common
that
law.
was the most referenced part of the book, wasn't it? I had like a big list of cases in the footnotes, I think. Um,
Yeah.
yeah, yeah. Well, we concluded that it is undoubtedly is property, right? Because there was cases from virtually every single common law jurisdiction where the judges
Yeah.
confirmed it was, and there was some senior judges in the UK also had issued papers confirming it was. But that being said, there's still quite a few scholars and academics out there that are arguing that a new type of property needs to be articulated by the law.
Mm.
So that I don't think that story's quite over yet, is it?
Yeah, I mean, in my country, it's called Sache, a thing. Yeah, so in Austria, it's definitely um, uh, um, definitely a category of the law. Yeah,
Mhm.
so the rule is it must be something different than a person, and you must be able to exercise control over it.
Okay.
So,
Okay.
for example, this book here,
Yeah.
this is a thing. Yeah, this is something that I can sell or gift or loan to somebody. However, for example, the planet Saturn is also sort of apart from a human person, but we cannot control it. I
Okay.
cannot sell you this planet. It would not, yeah, I cannot transfer ownership in this planet. That would not be
So yeah,
possible. Yeah.
actually, we never discussed the civil law part. So, and it's because you have with a crypto asset, you have your private key that you can update the ledger. Is that what gives you the sort of control?
Yeah, the private key gives you control. And control means that I can sort of choose what happens with this asset. And also I can exclude everybody else from control
Mhm.
over this asset. So if I watch out and keep custody of my private key, then nobody will be able to transfer my Bitcoins. So I can decide what to do with the Bitcoins and I can keep everybody out. Yeah. So
Mm.
this is what is decisive. That's why it becomes an asset or a thing or I don't know what the res is the Latin term. It becomes a res. Yeah.
Okay. Okay.
So
Yeah.
yeah,
And then the common law
yeah.
position, wasn't it, was that we have choses in possession and choses in action. So either an asset, something that you can physically hold, like my phone here, or that you
Mhm.
can take, you have some right from it that you can enforce it, which is a chosen action. You can take action
Mhm.
to enforce your kind of ownership of this either physical or intangible object. So we had it under the chosen action, and one of the cases that gave us confidence to say that was because people have successfully gone to court and
Mhm.
got freezing injunctions and that they've successfully sued other people to return these assets. That confirms that while it's not a tangible asset, it is something that you can enforce in the law against other people. So that was one of the things that makes it clear and under the common law that it's an asset. So that was one of the big points from the book, wasn't it? That absolutely no
Mhm.
doubt you can very safely hold crypto assets on trusts, and it's not going to fall off the balance sheet. Actually, I've been doing some financial statements for client structures, and it's quite interesting trying to work out where do you put the crypto. Like
Yeah, yeah, sure, sure.
yeah.
Which box is the right one there?
Yeah, if you've done like a SAFT or an ICO, what is that, right? So it's almost actually more interesting in the accounting world now, I'd say, actually, rather than the legal world on on how you treat crypto.
Yeah, yeah. Okay, SAFTs.
Yeah, you've done a few of those, I
Prepackaged
bet.
formula.
Well, they don't
Cool.
they don't exist under a lot of civil law, do they? Can you do them in Austria?
No, it's I think the SAFT Was that not an invention
It was
of
it was a,
an
it was a Silicon Valley
yeah, it
venture
was a Silicon Valley
Y,
initiative.
Y Combinator, right? But I
Yes,
mean
why?
it's effectively convertible loan in some way, but
Yeah, yeah.
they
But I
venture
think the
capitalists just simplified it basically, right? But I know you can't actually do it under Swiss law, so people do them, and it's quite funny when you see the crypto community because they all bastardize the same documents. So there's this English law template. Everybody is
everybody uses
using.
it. Yeah,
They'll just change the law, but it's still got the contracts right of third party 1999
yeah,
in,
not work.
even though it's under like Austrian law. And so, so there's lots of invalid contracts flying around crypto because they all just like swap
Yeah,
documents like that. But
yeah. It probably got worse with ChatGPT. You just type in, "Give me a SAFT."
yeah,
Change the jurisdiction to Switzerland.
that's
And it
exactly what you're
immediately
seeing.
signed. The
Yeah,
perfect document. There's no typo in it. It must be right.
that's right. Yeah, I've seen some of the stuff I've seen is unbelievable, but
Hmm.
cool. Okay, well, I think that was a great first introductory chat. So yeah, we're going to
Yeah,
do a lot of these videos on the book on specific topics. And yeah, thanks, Nicholas. That was nice just to have a bit of an update on what we're seeing in the world of crypto and how it relates to structuring.
yeah, super. Thank you, Ross. Great conversation, and we will have more of these in the next weeks and months.
Cool. All right, Nicholas, have a great day.
Okay, super. Ross, all the best. Thank you.